Sonthalia joins us now, represents Motilal Oswal AMC. Manish, good morning. Thank you for joining us. One side, you've got mounting concerns on Corona, fear of a second wave, no real recovery in the economy. Managements are refusing to share guidance for next 2 quarters, and markets are saying, let's ignore it. Why is this happening, and how long do you think this disconnect will continue?
As you said that it is a flurry of liquidity globally, $17 trillion worth of stimulus sloshing around the world. And some of that is even being felt in India. Having said that, I think some key reforms that have got passed and which has not yet got fully factored in the markets is basically the dismantling of the APMC. I mean, the positive effects of all this reform is actually not going to be felt over the course of next 1 year. But it's a game-changing scenario as far as the next 4-5 years is concerned. So I think anything to do with the rural theme, while it is getting priced in slowly and gradually, has a long way to go on the upside. So it will really uplift the farmers, so to speak, if implemented well over the next few years. So whether it be anything to do with farm output or agrochemicals or FMCG, the spending power actually goes up. Cement, automobiles, within that two-wheelers. Dealers are saying in the case of Hero MotoCorp that it's not a demand situation right now, it's more of a supply situation. So they are not able to fulfill the demand. The demand is so good. So these are some of the positives ever since the pandemic broke out. On the other hand, because of the liquidity, we think that really the high beta names are also going to see a floor or may have already seen a floor as far as the BFSI names, which is the highest beta space. They would also tend to rally on the upside. Of course, all of this lasts till about the first quarter numbers start to get reported, and across sectors we'll have more clarity on what the managements have to say, how they are seeing things, and so on and so forth. So the party continues till the next round of data comes through for the markets.
So as a money manager, what are you doing? Are you part of the party, or you want to be the Cinderella and you want to move out early?
No, so such is the funny thing in the markets that when the opportunity comes in the markets, there are not too many people who want to believe the up move in the markets. And when you believe that things are slightly on the euphoric side, you have tons of money coming in through the market. So it was a clear message when the markets actually tanked to 7,600 levels in the month of March, that this was basically an excess on the downside, and there was a very good opportunity for the markets to move up. So we are fully invested at all points in time. So whatever money is coming through, we are deploying it, and it's only the question that whenever the fear index is high, you have tons of opportunity in the markets. And today also, I don't think the conviction level of investors in the market is good enough that they are wanting to put in money. It's apprehension, etc. And slowly and steadily, when this gets priced in, maybe that is the point in time when you could see investors come through.
Okay, fair enough. Where are you finding opportunity, Manish? There's been a fair amount of deal flow during this time. We're also seeing a pickup when it comes to the rural segment. So we are seeing, from pharma to consumption to a whole host of pockets that are seeing some amount of activity building up. What are you finding attractive?
I find the automobile space quite attractive because there's a total disbelief given the fact that over the last 1 or 2 years, the auto sector has gone through a lot of pain. Not only have you seen, earnings compression across the board, we have also seen valuation compression all across the board, whether it be two-wheelers, four-wheelers, or even HCVs. So, valuations are extremely conducive, and over the next 2 years, probably you're going to see even earnings growth come through, and you're also going to see multiples expand. At this given point in time, at the bottom of the cycle, so to speak, this presents a very good opportunity, where there's total disbelief in the recovery post BS6, I think this is one space where a lot of opportunity still exists.
Well, we seem to have snapped that link. Okay, before I get back to Manish, I'm going to just quickly revisit some of the names as well that are actually holding up in the market. And Motherson Sumi, after that build-up ahead of the restructuring news, surprisingly is your biggest loser today. It's down about almost 5% as we speak. Though on the flip side, the gains are intact with BEL, HDFC Life on news of the index inclusion holding out. There's Ujjivan, there's Bharat Forge, Tata Consumer has propped up a good 2%. And typically, you don't see this name actually hold out within the top F&O movers. Tata Consumer looking good by about 2.25% as we speak. Manish, amidst all the gloom and fears all around and the uncertainty, the one data point which has come out strongly and convincingly, I would have to say, has been the tractor sales. Be the commentary coming in from Escorts or for that matter from M&M as well. Would you say that there are opportunities within this segment to buy into right now, or for that matter, play on the rural theme per se, be it FMCG or any other categories?
So tractor growth is going to be a proxy on the farm growth or the rural growth, and of course there is still opportunity in the tractor space. So whether you look at Escorts or M&M, I mean these are two listed plays, prominent listed plays in the automobile space. I think they continue to do well. And if you look at categories like biscuits or personal care, soaps, etc., personal hygiene, I mean all of that is also a proxy play on the rural income growth. I mean, all of them are going to do well, and it's not a question that valuations are extremely high and they should correct. I don't think that is going to happen. We're only going to see acceleration of earnings growth in the FMCG space, and particularly those categories which are catering more to the rural side of things. They are going to be in the limelight.
Yeah, absolutely. Just looking at some of these names, the Tata Motors, Tata Consumer, Bharat Forge, HDFC Life looking good. And this is an interesting one, right, Manish, because you've got the first insurance name actually making it to the index. HDFC Life is going to be replacing Vedanta. We all know because of the, low penetration as of now and the scope of penetration eventually, and especially in the light of COVID-19, just how critical a role insurance is going to play. Where within insurance do you think there's still opportunity to get into? And again, within insurance also, where is it that you park your money?
So HDFC Life is a 10-year compounding story. I mean, it's a no-brainer, so to speak. They are the best of the breed as far as the insurance play is concerned, whether it be savings products, whether it be annuity products, whether it be endowment, term insurance, you name it. And they execute it the best, and the cost structure is the least, so to speak. I think valuations are also fair. They are at a premium of 30-40% to the rest of the pack. I think the biggest opportunity in the insurance place, which perhaps may have not been fully factored in, is your Max Life. And with the tie-up with Axis, and hoping that IRDA gives through the approval, there's a lot of upside because it's trading at price to embedded value of something like 2.5 times, which is much lower than the likes of, let's say, either a SBI Life or HDFC Life, etc. But they're also very good companies. It's only that the price value comfort is the biggest in Max Life. We have that in our portfolio, and of course HDFC Life is a no-brainer. We have that in our portfolios for the long term.
Okay. What about PSUs, Manish? We're in fact going to be speaking to the BHEL management shortly, but we've been hearing about reforms, whether it be in power, gas, rail, across the board. Within the large basket of PSUs, would there be something that you take a relook at, particularly given current valuations and from the point of view of a longer term cyclical recovery?
I think the biggest reform the country can see in the coming months is basically on the labor side of things. The labor reforms are eagerly waited by the markets, and now that the ruling party has more or less a majority in your upper house of parliament, the Rajya Sabha, you can see some tough reforms going through. Of course, from a PSU standpoint, I think it's the best to go with monopolistic situations where PSUs are. Some of the PSUs are like oil marketing companies, you have a container corporation, or some of those PSUs which really represent deep value, deepest value, so to speak. So something like an Engineers India and like. So these are some of the areas where we like the PSUs, not across the board, but the areas where, or the sectors where they are probably one of the leaders in their space. And the valuations, of course, is a no-brainer. They have dividend yields of 3, 4, 5%. Valuations are nothing, a pittance, so to speak, and price value equation is extremely favorable. Only thing is that, the perception remains that government, considers the PSUs as funding their internal budget deficit, etc. But having said that, in monopolistic situations where the price value equation is extremely conducive, these are some of the deep value bets in the PSUs, which tremendously are attractive at the current point.
Well, Manish Sonthalia, appreciate your time. Thank you so very much for joining us. Well, in minutes from now,